Hi everyone, hope you are doing good. Welcome to the next video on my YouTube channel. My name is Saurabh Bharti, Microsoft Dynamics 365 professional. This is the platform where I come and share my knowledge and experience with you all. So without further delay, let's start the today's topic. And today topic is continuation of the last video which I have created on the inventory valuation, the part 1. This is the part 2, and we are going to understand the one of the valuation method with different scenarios. And as I said, we are going to move slowly, so we'll try to understand each and every different type of transaction and the impact of those transactions on inventory financially, as well as from the inventory value and the quantity perspective. The pure objective of this video series is not to explain a lot of complex things, but the first objective is to understand the basics about the inventory valuation, because what I believe is that if you understand the basic nature of these inventory transactions, you can try solving the complex problems which you get through the inventory reconciliations and the inventory valuations. So the objective is to understand the basics, and as and when we move, we will try to tackle some complex scenarios as well. Okay. So today what I'm going to explain is that it's a quick recap. So in the last video we discussed about different key components which directly or indirectly impacts our inventory valuation or inventory nature, right? Nature of those transactions, inventory transactions, right? So we talked about the storage dimension, tracking dimensions, the product attributes, item model group, item group. We spoke about the physical inventory and the financial inventory, right? To start with this valuation series, I'm going to pick up first 3 common methods, the weighted average, FIFO and LIFO, and then I will move it to the next valuation method, standard cost, moving average, and other methods which we have in Dynamics. Okay. Now, theoretically, if you want to understand what is weighted average, what is FIFO, and what is LIFO, right? So let's understand with an example without going into the system. So for example, you have a product P1 and you have purchased the product P1 on 1st of September 10 quantity, and you purchased with the total cost of 100, which means the 10 is your unit price, right? Then the same product on the 2nd of September you purchased again the 5 quantity with the value of 75, which is 15 each. And then again, let's say I have not put this, let's say on the same day, or let's say on 3rd of September, right, you purchased another quantity of this 15 quantity, and that's 20 each, and the total value is 300. Okay, so total value is 300. Now let's say on the 3rd, or let's say on the 3rd of September, if you are going to sell this product P1 12 quantity, right, what is going to be the value of these 12 quantities, right, when we sell it? As I explained in the last video, that valuation methods are not for the received inventory. Okay, it is for your issue inventory, when you issue the inventory from your warehouse or inventory, right? So if I'm selling this 12 quantity, that means I am taking out these 12 quantities, so the value has to be derived based on the valuation selected on this product P1. Okay. Now let's say if I have a valuation method selected, weighted FIFO for me, So what it is going to do, I have to take out 12 quantities. So the first in, first out. So what is the first in inventory is the 1st September. But how many quantities I have? 10 quantity. But how many I have to take out? 12, right? So what system is going to do, or what it should do, is that it should take out the 10 quantity based on this valuation. So total value is 100. Now it will look for the next first in inventory, which is the 2nd September, which is I have 5 quantities. So it will pick up 2 quantities from here with the value of 15 each. And the 2 quantity value will be 15 into 2, 30. And the first is the 100. So the total value it will be taking out is the 130 for the 12 quantity. Okay. Now, if I do LIFO, the last in, first out. So what it is going to do, it is going to look for the inventory transaction which has come last, right? So this is my 3rd September purchase. So I have 15 quantities. So I can take the 12 completely from this particular lot, and it is 20 each. So what it is going to do, 20 each and 12 quantities. So it is going to take the value of 240 for this. The last one is the weighted average. So the weighted average is going to sum up all the values what I have. So total value is 475. The total quantity which I have received is 30. And if I take the value, the average out of average of these quantity, it comes to 15.83. And if I multiply 12 by 15.83, it comes to the 190. So same transaction, similar method of posting the transactions in a different ways on different dates, right? But based on the valuation method, my value of these 12 quantity can differ. And that is why we use the valuation method, because it depends on the industry to industry or the business to business, that what valuation method they want to use it. And based on that valuation method, they are going to derive their inventory cost. Okay, so let's understand this with one example. And as I said, like, I'm going to pick up the one valuation method first, and while understanding this valuation method, we will also understand certain basic concepts and also the behavior of this particular valuation method. Okay, now what I have done here is I've created this table with certain columns where we have date, transaction type, and some reference. Then I have physical quantity and value, how it is going to impact, financial quantity and value, how it is going to impact, and then the total quantity, which is the physical plus financial quantity and the value. I'm going to talk about 3 different scenarios here. Okay, one, what if you have include physical value checkbox disabled on item model group, how it is going to impact. Okay, what if there is a sales after the financial inventory update. So for example, in this case, when I received this product through the purchase order 2, I had a value of, let me update here, 400, right? But when I did the PO invoice, the value got updated to 500, right? So how it is going to impact my cost of goods sold is the thing which I need to look at it. Okay, let me correct this Excel once. So that is what we are going to check. And another thing is, the scenario is, what if my PO invoice is done after I have done the sales invoice and my cost is already posted based on the previous value. So how it is going to impact. Okay, so these are the 3 different scenarios which we are going to cover. Okay, before that, let's see like what I have created as a sample data for the products. So I have created 3 different products here, inventory value IV 0123, and let's go and look at these 3 products parameter. I have kept a very simple product. So I have the storage dimension, site warehouse, tracking dimension, and the item model group. Let's understand the item model group, because that's a very critical attribute for any product's inventory behavior. Okay. Now, if you see this on the item model group, once you define this checkbox, the stock product, that is how the system is going to understand that this particular product is going to follow the inventory valuation method, or it is going to be managed in the inventory. The second parameter which is key is you need to define what valuation method. So right now we have selected the weighted average. Now we are keeping this include physical value disabled, and we will see the impact. Okay, so I'm not going to explain, we will see the behavior together, what it is going to impact. Then if you want to have the impact in your journal ledger, and if you want this to be posted, you can enable this. Okay, then this is to post the accrued liability from the finance perspective at the time of product receipt, and similar entry at the time of packing slip. If you want the deferred revenue to be posted in finance, you can enable this, and then you need to subsequently set up your posting profiles as well. Apart from that, there is a negative inventory allow and the disallow. In my opinion, most of the times we should keep the financial inventory negative and keep the don't allow the physical inventory negative. So physical inventory is what? When you receive your inventory at the time of product receipt, or you issue the inventory at the time of packing slip, right? That is your physical inventory, right? Now, when can my physical inventory be negative? If I do not receive any product, even if I have not done the product receipt, and still I am trying to sell that, which means I do not have the product at all at my location and I'm trying to sell this. So in that case, it will have the negative physical inventory, right? So I should not have that situation, right? And that is why we keep it disabled. When can I have negative inventory? So let's say I have received the physical inventory by posting the product receipt. So I will have 10 quantity reflecting as physical inventory. Can I sell this through the sales order invoice? Yes, because I have this inventory available with me. So when I will post the sales order invoice minus 10, it is going to reflect in my financial inventory column. And that is where it will be minus 10 negative financial inventory. But this is allowed. Why? Because I have the physical inventory for this. And that is why we keep this thing, right? If you don't allow this, that means we are saying that we can't sell any inventory which is there in our warehouse until it is been invoiced by our supplier, and which is not the right business practice any customer will follow. Okay, so that is the impact which we have it. Okay, there are other things which I'm not going to explain much, but yeah, so let's go with these parameters, and keep in mind right now this include physical value is disabled. And now I'm going to create two different purchase orders, and we will see the impact of those two different purchase orders in the system. Okay, so now let's understand the impact of different transactions. So what I have done is that I created a purchase order with 10 quantity, received the purchase order. So if you see, it is just updating the physical cost amount, not the financial cost. And this is again this purchase order. Then I have the another purchase order with 20 quantities. Again, this is just a physical, and then I have created a sales order 783, and which is against 10 quantity. And if I go and see, the order status is delivered. Now, which means now it did not update the physical cost amount at all. Okay, ideally it should have picked up some cost, but it did not, and this is because of your include physical cost amount which we have posted. Okay, now if you want to see the impact of this let's say physical voucher, it is going to be blank because there is no value. But whereas if you see on the purchase side, it is going to have a physical voucher, which I think it is in the journal ledger. It is stuck somewhere. Let me just look at this. Yeah, so transfer now both the product receipts. So now if I go and refresh, yeah, so I have my inventory, cost of material, received inventory, posting type is updated. Okay, so this is how your physical inventory gets updated, and the impact of the cost amount, include cost amount, is this. Okay, now what I will do is let's try to, now I have just posted the product packing slip of the sales order, and let's see if I go and enable that checkbox on the product. Okay, whether it is going to add the cost on this on the at the time of the invoice or not. Okay, so let's go to the product item model group, and I'm going to edit this, enable, go back and go back to sales order, close this, and let's try to invoice this. So let me post the invoice for this. So after posting the invoice, if we see, it has picked up the financial cost amount, but the physical cost amount is not updated. Okay, now if I go and see the financial voucher for this, yes, it is going to update my cost of goods sold by the amount. Okay, how these amounts are calculated and things we are going to discuss in future. So but the idea of like include physical cost amount here is to understand whether that is how it is going to. So if we see this in this case, okay, I have put the 10 quantity, but the include physical amount helps us to understand the value of our cost of goods sold or the issue inventory when we have not invoiced our purchase order and there is no financial inventory available for us. Okay, now let's understand the weighted average behavior in case of sales after financial inventory value. Okay, now in this case I'm going to do one thing. I'm going to create a product receipt for 2 POs again, and I'm going to pick up the different product, and we will see that if we post the packing slip, now our physical cost amount is enabled. So now we will see the difference whether it posts some physical amount or not. Okay, and then we will post the purchase order invoice, but at this point of time we will change the value of the purchase order invoice from 400 to 500. So there is a change in the value. So we will see that how it is going to impact the sales order final invoice value. That is the idea. So let me post these transactions and then show it to you. Okay, before we move to the next one, if you see here why it has taken 110 as a unit average price, because I just have posted only one purchase order. The second line, which is 200 or 400, is for the different product. Okay, so ignore. So that is why it is taking the 100 as a cost of goods sold as a weighted average, because there is only one transaction. So just to clarify that. Okay, so now what I have done is that for the second product, now the use case is that I'm going to check the financial value change for after the sales order, before the sales order invoice. But right now let's understand the intermediate step which we have changed for the include physical cost. So now my item model group is enabled with that, and now if you see, when I posted the packing slip for this new sales order, it has picked up the physical cost amount, whereas in the last example when this was disabled, there was no physical cost amount was picked up for this particular sales order, which means now I have at least the estimated value in my inventory which has been issued based on the weighted average. So how the weighted average has been taken. So I have 400 amount for 20, which is the 20 each. Then the 10 quantity each is this. So based on that, it has taken my 250 as a cost, a physical cost amount. Let's see in the Excel spreadsheet and let's update there. So if you see this example here, So my sales order packing slip has been posted. So my physical cost amount column has been updated by 500 total amount divided by 30 into 15 quantities. Okay. Now the next step which I'm going to do is that now my weighted average at this point of time is the cost is 250, but this is based on when I have posted my product receipt or of the purchase order 2 at 400. Now what if at the time of PO invoice if my value gets changed to 500, how it is going to impact, right? So let's understand this, and then how subsequently when I post the sales order invoice, is it going to be still 250 or is it going to be changed, right? So let's understand that part in the after posting the PO invoice. So this is my purchase order and I'm going to record the invoice for this. Let's put some invoice number IV02 test. I put some date, but here what I'm doing is that I change the unit price from 20 to 25. So my amount will be changed to 500, right? Okay, and now this is going to impact my financial amount on the purchase order 2, which was earlier 400. Now it had changed to 500, and subsequently we will see that if we invoice our sales order, how it is going to impact the cost of goods sold or the inventory value for the sales order as well. Okay, now I'm going to post this. So my invoice has been posted. Let's go back to the inventory transaction. So this is my inventory transaction screen. Now I have posted. Let's refresh this. So now it has posted the 500 as a cost amount. So this is my final value. So the financial amount is my final value. If I want to see the ledger impact, I can always go and click here and see the financial impact of this. Okay. Now let's see if I post the invoice of this, then how it is going to reflect. Is it still going to be 250 or it is going to be changed, right? So what I'll do is I'll go to this sales order and post the invoice for this particular sales order. So I go to invoice, post the invoice for this. So this is my sales order invoice and let's post this. So my sales order has been invoiced. Now let's go back and what is the impact it is going to have. So now my weighted average for this has been changed from 250 to 300, right? Because the value for the purchase orders 2 has been changed, right? Now let's go back to the Excel spreadsheet and look at that, how it is going to change this, right? So what would have happened here? So the financial cost amount has been reversed, right? So this would have been reversed here. Okay. Now 15 quantity would have been how much? So the total value is 500 plus 100, 600 divided by 30, right? And multiplied by 15 quantity is my 300. So that is what is system has calculated, because my now final value is 500 plus 100 which I have. So the first purchase order is still the product receipt, so it is going to consider that value. Okay, so this is the impact when you post the sales invoice after getting the purchase order financial inventory value. Okay, now you must be wondering that how these columns are getting updated by physical cost, quantity, amount and all. So this is the typical format of inventory value report, which I'm going to run after running this particular scenario. Okay, and then I'm going to show you that. Okay, now in this scenario, what I'm going to do is it is similar to this scenario for the third product. Let's say we have done the product receipt with the 100 and let's say the 400 value, right? And then done the packing slip and even done the sales order invoice. So what will be my expected value here? It will be 250, and here also it will be 250 only when the financial value gets updated. But then I have updated my PO invoice with 500. Now in that case, the value which has been posted for the sales order invoice has to be updated with 300. Now how that is going to work is a question in Dynamics, that how Dynamics is going to accommodate that additional cost. Okay, so we need to see that scenario. Okay, so let me create another 2 purchase order and 1 sales order and post this thing and see the impact. Okay, so now what I have done is that I have taken the third product and I have created the 2 purchase order for this with the value of 100 and 400, and then I have created a sales order, and at this moment my sales order invoice has been posted, and when I posted the sales order invoice, it has taken the 250 as a weighted average price. Now what will happen, now this has taken based on the 400. Now what will happen after posting my sales order invoice, if I post the PO invoice and the PO invoice value gets changed, how that is going to be adjust my the cost of goods sold amount? That is the question. So let's post this purchase order invoice with the amount 250. Okay, so I go to purchase order, to this invoicing, put some invoice date and details, and I'm going to post this, not post like this, but we need to change the price. Right now you must be wondering that why the unit price will change. Now there are a lot of variants for that, right? So when the supplier is submitting the invoice, it might be the unit price got changed. That is one example. The another example is that you are having the freight cost or other cost loaded during the invoice. That's another example, might change your purchase cost what you had in the original purchase order. Or also you might have the tax impact which you want to load to your inventory value. So there can be multiple scenarios for that, and based on that it is going to change your financial cost amount for your purchase. Okay, now I'm going to just post this invoice and see that how it is going to impact my inventory transactions. And it is very important as a consultant that we understand the transactions impact, how it is changing the behavior. Okay, so that is why I'm not showing you all these process of creating purchase order and things which I am assuming that you know already. What I'm showing you is the impact of these transactions on your inventory. So now if I refresh this, it had changed this 500, right? Now there is a catch here. Now the cost which I have posted as a issue cost based on the weighted average is not right, because it should be 300. Let's go back to our Excel spreadsheet and see that why I'm saying it should be 300, right? So now I have posted my packing slip which was 250, which was right because I had not posted the invoice, but now here it has posted 250. Now this is my 500. Now if I see the inventory which I have received totally with the PO1 plus PO2 is now with the value of 500 plus 100, right? So that is going to change my valuation. Okay, but in this case now my last transaction has been posted as well, so I do not have this value adjusted. So now that is the problem for us, that how do we correct the value of 250 to 300. Okay, so hope you understand till here the weighted average only, but the behavior of physical inventory, financial inventory and all those things. Okay, so now if there is any issue with our inventory valuation and which has not been posted correctly, right? So there is a concept called inventory recalculation. Now inventory recalculation has a different impact for different valuation method, which we are going to talk as and when we talk about these things in future videos. But for now, in the weighted average, the one of the use case which we have here is to solve that how do we correct the cost of goods sold which has been already posted, but my financial inventory got changed after that, right? So now for this, we need to run the inventory recalculation for this product, and then it should post an adjustment here. There should be a transaction here, which will be, let's say if I post, if I do the inventory recalculation 6th of October, right? And it is going to be type of inventory recalculation, but the reference will be against this SO, which I have posted. And this is going to post here as a 0 here, and quantity adjustment will be 0, but here it is going to put the 50 as a value, so that for this sales order 250 plus 50 is going to be 300, which is as per the inventory valuation. Okay, so let's see this last step for this use case for today's video, and then after that I'm going to run the inventory valuation report just to see this view what I have created in the Excel spreadsheet. Okay, so to run the inventory recalculation, I need to navigate to Dynamics for the inventory and inventory adjustment process. So now I'm in Microsoft Dynamics. What I need to do is that I will go to inventory management, collapse, then I have a periodic task, closing and adjustment, and this is the place where I run the recalculation or the inventory closure process, which we are going to talk about. So let's run the recalculation. Click on the recalculation, and I'm going to run, let's say, as on 10th of October. What I'm going to do is that I'm going to put a filter here, and the filter will be the product which I'm going to check here. Okay, so let's do this filtering here. So I apply here as an item number and then change it. Let's change the specification to item number, and let's run the recalculation. Now this recalculation should adjust my 50 as an amount which I have posted wrongly here, or which system has calculated wrongly. Now the inventory recalculation process runs in a batch. Okay, so if you see, it is running and it is executed on this. It's a recalculation type. Once this is done, we will be able to see the values. Okay, so my inventory recalculation is finished. Now I can see this details of the settlements here. Okay, I will take a pause here. What do you think? It is going to post the adjustment of 50 in the amount or something else? In my opinion, as I told till now, it should post 50, but it is not going to do the 50. It is going to do something else. Okay, and we will see that why it is doing something else. Okay, and then I will leave this video to that place, and then I will explain in the next video why it has done possibly. Okay, so if I have to see the adjustment details about this recalculation or what things it has done, so I can just click on details and see the settlements, and it has done the weighted average, right, principle. It has adjusted a sales order, which is right, we were expecting the same sales order, but it has adjusted the value 125 instead of 50. So it has reduced further or increased the value further by 125. So why it has done? So if I go to transactions, if I refresh this, it has posted 125. So my total value has changed to 375. Okay, now if I move back to my Excel spreadsheet, so if I go back to, if I come back and see this, so instead of 50 adjustment, bringing it to 300, system has brought it to 375. Why? Because let's say, like, so if I see the 375, the my weighted average it has calculated is 25. But why 25? I was expecting 20. Why? Because I have 500 for this purchase order and 100 for the another. So 600 divided by 30 is 20. But instead of 20, system has considered the weighted average as 25, right? So why it has done? So at the time of recalculation, system is not only going to not only going to adjust the values as per the valuation method, but it is also going to calculate your actual weighted average value as per the valuation method. And how it is going to calculate, the formula for that is the total financial receipt value divided by total financial receipt quantity. So it ignores whatever has been posted physically in the final valuation method calculation. Okay, now as per that, if I go and see what is my total financial value received is 500, what is the quantity for that is 20. Now is based on that, if I calculate, it is 25, and that is what system is considered as 375 as a value, right? Not 20. Now if 375 is there, then if I consider what has been posted is 270, 250, and the difference of that is 125. So first system is going and correcting the valuation method, then it is going and finding out the adjustment value for the sales order which has been posted. Okay, now you might say that what will happen if I go and do the purchase order invoice for the first purchase order also? Is it going to now update my valuation method by 20? So yes. So if I, let's say, post that, now as per that, if I run the recalculation again after posting the purchase order invoice, it is going to calculate my weighted average with the total financial received amount 500 plus 100, 600 divided by 30 is 20, and as per that it should be 300 the value, but system has already posted 375 in the last recalculation, so it will find out the difference. It is 75, so it will post the adjustment of 75 for me. Okay, so if we see our Excel spreadsheet, so I have understood my this, but what if I do the second purchase order invoice again and then run the recalculation? Is it going to reduce the value further by 75? So that is the question. So let's do one thing, post the purchase order invoice, run the recalculation and see the impact again. Okay, so now if you see, I have posted the invoice for this and the financial amount got updated for this, but this adjustment did not get changed, right? So what I'm going to do is that I'm going to run the recalculation further, and I will just change the date for 11th now because I have already run for this 10th of October, and I'll just click OK. Now ideally it should post the adjustment of 375, reducing the value of 75 and bring it to 300, because now my actual valuation weighted average value is 20, not 25. Okay, so let's refresh this and let's wait for this to complete. So it has completed. Now if I go and see my settlements, so it has posted the 75. If I go to inventory transactions, it should become my 50. So it has become my original value which I was expecting. Why? Now I have invoiced this thing again. Okay, let's move back to our Excel spreadsheet and understand this. So let me change my screen. Okay, so now if I consider my total financial inventory received and the quantity, so total financial received inventory is the 600 because 500 plus the 100 which I have posted, right? And then divided by 30 is the quantity, so it is 20. As per 20, if I considered my cost of goods sold for this 15 is 300, but how much it has posted in the last recalculation is the 375. Now what is the difference between 375 to make it 300 is 75, and that is what system has posted in the as an adjustment. Okay, so now just to summarize, we have seen three different scenarios how the physical value gets impacted. So it gets impacted that it does not post any physical cost amount when we post the packing slip or issue the inventory, because it does not include the physical value. Okay, then we talked about what if how my financial value gets impacts my sales invoice. So when I did my issue of the inventory after the purchase order invoice, when the value got changed, I saw the impact in my weighted average calculation. Okay, then what if my invoice or the inventory is sold before I received my purchase invoice, how it is going to impact. And there we learned one more new thing, that how my actual weighted average valuation is calculated in the system. So it is not only about posting the adjustment for the cost of goods sold which we have posted, but it is also about calculating the right valuation, value based on the valuation method. And for the weighted average, the valuation method or the value which gets calculated is the weighted total financial received value divided by the quantity. And we saw the impact by doing two different recalculation, and system is understanding that, right? Now there can be a lot of possibilities. This is what I am explaining as per my knowledge and experience which I have seen. Now there can be a lot of permutation combination. What if now someone can come and ask that what if I do this in the next month, is it going to have the cascading impact and all those things. So we will talk about that in the future videos. Okay, so we will see that how it gets impacted. But just to conclude this video now, how do I see this particular data in a proper report format to analyze my transactions? Okay, and before I move forward, it is not only going to correct the sales invoice. Any inventory issue you do, it is going to behave in a same way. So to show this report, the most important report which we have in Dynamics is the inventory value report. So I'm going to run that inventory value report for you and show these transactions in this format. Okay. So I'm going to run the inventory value report, which is in the cost management. I can run this inventory value storage reports. So I will just run for this particular product, which is IV003. Okay, so which is, yes, IV003. And I'm running till 1st to 15th of October just to see the correct impact. So yeah, that is how I'm going to run this. Let's see how it is going to reflect for me. It runs in a batch job, so we can see the data. So it has completed. Now if I click on the view details, now I can see all those columns. So it has the material, audio, this is the group, this is the site, transaction time, actual date, no beginning balance, so there is nothing. And now this is where you can see all the impacts here, right? So you see here, first purchase order, I have just, now if I expand these, this is your financial quantity, inventory, the physical quantity and the value. So all these columns are here. So first two are like when it was just financially product receipt was done, so that is what it is reflecting. Then I posted the packing slip, so it just it's still a physical value. Then I did the sales order invoice, so it is now considering this. And if you see, it is reversing what it has been posted on product receipt and moving it to the financial quantity. Similarly, the purchase order, it is moving from the product receipt to this. But the only difference is here at the time of product receipt it was 400, but now it has changed to 500. Then I did the recalculation. If you see this 10th of October, it is taking this and it is telling also that against which sales order or the type of transaction it has posted 125. Then I have done the purchase order, again the invoice, it has reversed that, and then it is showing the adjustment. So the inventory value report helps us in analyzing the transactions end to end. Okay, so that concludes today's video. It was a long video, but trust me, this is just a starting. Okay, we covered the basics. So now I hope you understand the different ways or the permutation combinations which might have, right, for posting the transactions. But the key call outs here is what we understood today is the impact of physical value and the financial value, the include cost, physical cost amount checkbox on item model group. The third thing which we learned is that at the time of recalculation, how the adjustments are going to work, and also calculating the true weighted average value at the time of recalculation, and the formula system considers that. Okay, and then the final is the inventory value report, which we have just now saw that how the data is reflecting. Okay, that's it for today's video. Hope this is going to help you in understanding the different scenarios under weighted average. I'm going to cover further more scenarios and the different valuation method in future videos. Okay, so that's it for today's video. If you like my content, please do like, share and subscribe. Okay, and that's it. See you in the next video. Thank you for watching. Take care.